Year-end is right around the corner. There are some last-minute tax strategies that business owners can implement to reduce your tax bill and keep more cash in your pocket. That is why in this video, I am going to break down some last-minute tax strategies, tell you exactly how to implement them and how they will save you money on taxes this year. But before we jump in, I'm gonna need you to like, comment, and subscribe so you don't miss out on any of this wealth-building information. Now, let's get after it. Maximizing your retirement contributions is a great strategy. So many of you are leaving money on the table, and I know I'm dealing with smart people. When you work for a company and you are getting W-2 wages, and that company is going to match your retirement contributions, at least contribute to the amount that they are going to match, and more if you can do so. Because when you contribute to a retirement plan, you are reducing your overall taxable income, and you're going to ultimately pay less taxes to the government. There's a fine line on how much you can contribute and how it's going to impact your take-home pay, therefore reducing your overall tax bill. Get with your tax strategist to run some numbers for you so you can maximize that benefit. Don't think about, oh, this $100 is coming out of my paycheck, because maybe that $100 is coming out of your paycheck, but that 100 could be saving you 50 today and making you 150 years from now. So make sure you're maximizing your retirement contributions, and you can contribute up to $22,500 in 2024 and $30,000 if you're over 50. And if your company doesn't have retirement plans, contribute to your own IRA. Set up your own retirement plan. You can still do it tax-free up until April 15th. Accelerating deductions is also a great benefit. Let me explain to you what that can potentially look like. Let's say you know you're gonna owe some state income taxes for the following year. If you pay it in the current year, you can get the tax deduction, obviously up to the $10,000 state income tax amount. If you know you're going to be doing some massive charitable contributions, you might want to do that in the current year. As a business owner, you also want to stack your deductions in the current year. If you can afford to pay some of your January expenses in December, go ahead and accelerate those expenses into the current year so that you can get that tax deduction in the current year. The reason why we can do that is because we are what you call cash basis taxpayers. We take our deductions when we actually pay them, not when we're actually going to use them. So make sure you accelerate as many deductions as you possibly can. Deferring income is always a great strategy. You want to invoice your customers, but if your customers are paying you by check, don't deposit those checks until the following year, making sure that they hit your bank account in January versus in December. A couple of days probably aren't going to matter for financial purposes, but it will matter for income tax purposes. You're only reporting the income that you receive in the current tax year. So strategize and see, you know what? Instead of pushing my invoices out early, I'm gonna push my invoices a tad bit later. Only do it for those customers you know that pay. Those customers that don't pay, don't do that trick. But only defer income when you can afford to do so. But it will reduce your overall tax bill, because in taxes, you want to accelerate expenses and you want to defer income as far as possible. And when you do it strategically, you can minimize your tax bill. Investing in equipment and technology that you know you need and doing it now can really help you. If you know that you need to purchase additional things, like purchase a new truck, purchase a new vehicle, doing it in the current tax year may help give you write-offs. For example, if you have to purchase a car, purchasing it in the current tax year will not only allow you to write off your car, but what about the sales tax that you're paying on the vehicle? Did you know you can take sales tax as a deduction on your tax return when you itemize your deductions? These are the kind of things you need to think about. Whenever your money is moving, think about the tax implication. Sometimes an extra $500 paid could potentially save you $2,500 on the back end. That's why it's so important that everything that you're doing is going to be driven by tax strategy as you are evaluating how you're going to spend your money. It's not just about income and expense. It's also about the tax strategy around how that money is going to be spent. Also, remembering that tax codes allow for you to take depreciation on equipment, take Section 179, accelerate those write-offs on equipment. So vetting it out from a tax perspective is always a great strategy. If your business requires you to have inventory, make sure you review and maximize your inventory purchases. One of the smartest strategies you can do at year end is to liquidate as much of your inventory as possible. If you have inventory that is sitting, that is not moving, put that inventory on sale and get it sold. Why? Because from a tax perspective, you cannot write off the cost of inventory until you sell the product. So you want to make sure you are able to sell products. That is why you always see companies having these year-end sales, these blowout sales at the end of the month, because they want to liquidate inventory so that they can write off the purchase price of that particular inventory. Last but not least, make charitable contributions. Many of you are givers. You love to help others. Did you know that you can make charitable contributions, aggregate them together, and itemize your deductions? A great strategy would be, how about opening up your own nonprofit? Is there a reason why you can't have a nonprofit? Absolutely not. What if you were to open up your own nonprofit, make sure you open up a bank account before year end, and donate to your own nonprofit before December 31st? I'll wait. What a great strategy. You can be able to get a great charitable contribution and still have access to your money. Yes, you have to use the money for the charitable reason you created your nonprofit, and that's a completely separate video, but a great video for you to watch is because a lot of people create their own nonprofits. Then they take that nonprofit and maybe they open up a baseball league for their kids, a cheerleading league, whatever the case may be. This is where tax strategy becomes so important. So as you are trimming that Christmas tree, as you are putting that turkey in that oven and thinking about all the year-end things you would like to be doing, don't forget to think about your taxes and give yourself the best present of all, a lower tax bill and more cash in your pocket. Now that you know what strategies you can use as a business owner at the end of the year to reduce your tax bill, you have to implement those strategies. You also have to share this video, like, comment, and subscribe so you don't miss out on any wealth building information. Now, go get after it.